So as promised in today's YouTube video, I told us we'll be flipping accounts and I'll be telling us why the trade is. In this particular trade, we're currently at $15,000 from a $643 account. So we're growing $643 to about $15,000 in profit, $643 to about $16,000 in profit. Look at the entry point of the trade. You could see where we entered and how we've pushed the market all the way up, and we're making currently $15,000 plus from it. Now look at what you're seeing on the charts. I'll be explaining why I entered this trade. Now look at the entry point of this trade. There's an entry point here. This is the entry point of the trade. Now this is the entry point of the trade. But if you watch, you could see that this market bought all the way to this place. Even after buying, it still sold down to our entry point. But then we didn't close. When it was around here, we're probably around $5,000, $6,000 profit, making a whole lot of money. But then we didn't close the market. Why? Because there is a strategy that we're using for long-term trade. You're not scalping. If you're scalping, you probably have closed here at $5,000 and you'll be good. But now you're looking at the long-term definition of the market. You're looking at what's happening long-term. That's why even though we bought the market here and then the market bought all the way here and then sold all the way back to our entry point. Imagine when you're having $5,000, $6,000 profit and then the market goes back to your entry point. But then because you know you're trading what you see, not how you feel. This is not gambling. You're trading what you see, not how you feel. Because of that, you're still holding the market all the way to the top. And then because you are swinging long-term over short-term, if you're having 5K here, you could see what you'll be making here, about 15,000, 16,000 actually dollar profit from the trade. The point is, there's swing entry strategy, there's sniper. Now, the strategies that we'll talk about, first of all, I've done a swing entry topic here on this YouTube channel where I told us about a lot of things about swing. And one of the main things I told us about swing, which I'll repeat in this video, is that whenever a swing trade is forming and you want to use my strategy for swing trading, you must know that for a buy, if you're going to go for a buy in that market, the higher lows of that buy is not important to you. And for a sell, the lower highs of the market is not important to you. Why? Because the market is still forming. So a lot of things are not important. Some things could be as a form of disturbances. Do you understand? If you're trying to buy a market, and the market is supposedly meant to move like this for a buy, you know, you're expecting the market to buy all the way to the top and stuff like that. You should know that the higher lows, this is a higher low of a buy, this is a higher low, this is without trend line analysis, this is a higher low and all those stuff. Because that market is still forming and those areas could still have disturbances happening around it because it's a new formation. Because of that, those parts of the market is not important to you. So a breakout from that part doesn't mean a reverse in the trend. In the trend. Most of us already know that the breakout is change in trend. The market is buying, it stops buying, now starts selling. That's a breakout. You're no longer buying, you're now selling. So if you're going to see a breakout of a buy, that's a sell. If you're going to see a breakout of a sell, that's a buy. But because the market is still forming and you're looking at the overall view, you're looking at swinging it for the long term. That means the sales happening is none of your business. You're looking at the long-term value of the trade. Those higher lows are not important to you. They would come because expectedly, if a market is going to buy all the way up, it will buy, sell, buy, sell, buy, sell. Normal. But then, because you know this now, the higher lows are not important to you. You're looking at the overall trend. So even though we bought this trade here using what we call the fake out strategy, that's where we took the entry. The market still reversed back to this same point. But because the higher lows are not important to us, the market is still forming. The market is still forming. So all those parts are not what we're interested in. And I keep telling people the most important part of swing trading, apart from the emotional aspect that a lot of people are faulting at, the most important part of swing trading is the entry. Is the entry, because if the entry is good, you'd overcome a lot of things. Imagine now, let's assume that you're swinging and you want to take a trade for a buy. And then this trade is currently at this point. And then you go for a buy here, for a swing. Your entry is wrong. You might have the analysis, yes, that the market is going to buy. Your analysis might be correct. But then, because the entry is wrong, and you're swinging long term. So if the market reverses back to that entry point that you are, if the entry is not the good one, you'd lose out from the market in the long term. Example, you could see where I have my entry at. Now this is after I've done a lot of confirmation. I've posted a lot of videos on this channel that has dealt with entry confirmations of trades. Now entry is different from just the strategy for entry is different from the strategy of holding the trade. It's not the same. So when you're having an entry point confirmation and then you take your entry, the confirmation is very, very, if you don't have confirmation for the entry, that means that the entry might be wrong. So when you have an entry point confirmation like this, like the one you're seeing on the screen that we had here, and we took the trade, you could see where we took the trade. Again, please don't make this mistake of whenever you enter a trade, you go and enter another one. No, don't say, the market has broke out of here, I have to enter another trade, I have to enter another entry. Don't go and do that mistake. People do it and blow their money because of it. You were trading, you're looking at the long-term value of what you're trading. Once you take an entry, leave it like that to go all the way up. Leave it like that. Don't go and say you want to enter another one or do all those kind of things. You can see that once we entered here, maximize it. Very, very important. Maximize it. Maximize it. You could see that when we entered here, we left the trade to go all the way up. We make sure we put in all the lot sizes we want to put. You want to put 100 lot size, 500 lot size. Entry confirmation plus the strategy you're using. Once you get it, maximize it. Use the 100, use the 200, use the 500. Main thing is you've maximized it for all the way up. Don't go and start entering another one or entering something else. Now, back to what we're saying about the entry. Now, you could see that after we've entered the market here, after having an entry confirmation from probably other time frame lower and all the stuff, we had the entry here, took the market all the way up. Even though the market bought here and still reversed back to our entry point, because the entry we entered is good, because we have the confirmation from other time frames, especially lower time frames, because those confirmations were there to identify and clarify our entry, the market will not sell beyond the entry point. Because that's the entry, that's the place the market starts to move up in the real direction. Now look, this market started to buy from here. But then the point where you are to enter after having entry confirmations is from this area. And because of that, even though the market bought and still reversed back to the entry point, it stops nothing at all. It stops nothing because your entry is good. You're swinging, the most important part of swinging is the entry. And then after that, you now start talking about the emotions. And don't go and be tempted to say, this market is dying, let me enter another this thing. I was in the trade some days back. That kind of mindset came up. I said, nah, I've thought this, I shouldn't enter another one. And if I'd entered another one in that trade, I probably would have lost it because the market started selling down after those instances. The point is this, you're a trader, you want to swing. Swinging for the long term is good because the truth is, why most people fail in Forex is probably because of invalidations or fake breakouts or all those kind of things happening, is because the market respects the general view. The market is often viewed from the general view. So whatever is going to happen in the market is happening for the long term. It's not interested in you that is using your 5 minutes time frame to scalp or do all those things. It's interested in those that are looking at H4, H1, and they are holding it. So if the H1 like this is giving you buy, fucking do it. You have to, because that's what the trade is telling you to. The point is, you want to swing. For this time, know that the higher lows of your buys are not important. The lower highs of your sells are not important. The entry point is the most important part of visual trading. Have a confirmation from other time frames. We've talked a lot about confirmations on our other YouTube videos. You can go to the channel and you watch a lot we did on confirmation. Have a lot on confirmation, and always know that I think the emotional part of trading is something that most people would learn on their own. You learn it on your own. So the point is, trading is good, and you could make this huge money that we're making, about $15,000 off. You can do it too. If we did it, you can do it as well. Yeah, cool. Make sure you subscribe and follow, turn on the notification bell to always get videos that we post here. Okay, man.